Hello everyone, today I'm going to share my views on Sea Limited stock. In this video, I will be discussing on what investors can expect from Sea in 2022, the good and the bad stuff. At the end of the video, I will also share if this is a good time to buy the beaten down growth stock. Watch on to find out more. But before I dive into the Sea, as usual, hope you can help with the YouTube algorithm by liking this video. Your little support means a lot to me. Okay, a quick introduction of the company. Sea Limited is a technology company with its businesses spread across three areas. First up, Garena, a digital entertainment platform and one of the leaders in games development. Next, Shopee, an e-commerce platform. Think of Amazon and Lazada. Then, they have Sea Money, financial services and payment provider in Southeast Asia. Examples are mobile wallets such as Shopee Pay. In the recent earnings report, the Singapore-based tech giant's revenue increased by more than 100% year-over-year, beating analyst estimates in the process. But its net loss widened to $2 billion from $1.6 billion as it continued its aggressive expansion plans. Alright, let's first talk about the good stuff. Shopee is arguably the largest e-commerce in Southeast Asia and Taiwan. Not only that, they are expanding beyond these two markets by entering competitive regions like Latin America, India and Europe. In fact, Shopee Brazil is already the top app in the shopping category by downloads and total time spent on the app. So as you can see, Shopee continues to grow and their growth rates are impressive. It is definitely one of the fastest growing e-commerce companies in the world. Next, the company is expecting its digital financial services revenue to rise 155% to about $1.2 billion this year. This top-line growth might offset Garena's slower revenue growth, which I will discuss later. It is also worth mentioning that Sea Limited has a great balance sheet and their debt position has so far been manageable. Okay, moving on to the bad stuff. First up, Shopee. Even when Shopee is ever expanding, their losses continue to widen as it scales its business. Thanks and no thanks to their heavy investment in marketing to solidify its leadership in Southeast Asia and penetrate newer regions like Latin America. The latter in particular has been a significant cash burner lately. I mean, I'm not surprised by this as you can imagine the amount of cash they need to burn for dishing out various discounts and vouchers, and engaging brand ambassadors like international stars Cristiano Ronaldo, Jackie Chan, Blackpink, Taiwan's SHE's Ella, to our local celebs such as Mark Lee, Fan Wong, and Phua Chu Kang. Just imagine how much do you need to pay Cristiano Ronaldo to do that cringeworthy dance with the tune of Baby Shark?
Shopee?
Shopee, beep, 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 beep. Buy everything, ding, 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 online.
哎呀，呢老闆嚟話你真係，我已經話咗唔得㗎啦，你仲要咁嘅，你完全唔理我幾咁難受嘅你，你唔好再煩我，我一嘢懟死你。
Sorry, I have to do this. Anyway, very impressive lineup, but this cash burning tactic cannot last forever. True enough, I think it's happening here in Singapore. I am a Shopee user and I realized that they are giving out lesser points and vouchers in recent months. I think this is necessary to lessen the losses, but this also begs the questions of whether consumers will stay loyal to the platform. We have Lazada, which is backed by Alibaba, and Amazon here, and both giants can be more aggressive than Shopee if they want to gain market share in the Southeast Asia. Look at Lazada and their regional brand ambassadors. It's okay if you don't know any of them, you just need to know that they are famous celebs in their regions. Personally, I switched from Lazada to Shopee a few years back, and it may not be very hard for me to go back to Lazada. In fact, generally speaking, it is easy for tech-savvy individuals to switch between the various e-commerce brands. Next, Garena. It is no longer a secret that Garena's growth is slowing down. Their growth might have hit a plateau based on the figures presented in the earnings call, unless they innovate or have plans to turn things around. This slowdown could be because its top game Free Fire lost its momentum in the post-lockdown world as people played fewer games. This will even be more obvious when the world opens up further, be it workers going back to office or return of international travels. An added worry came when the Indian government recently banned Free Fire in India. As India is one of the top markets for Garena, this event will definitely impact Garena's performance in 2022 if the company fails to resolve the issue soon. In other words, investors could see lower active users and revenue in the first quarter of this year. Moving on to C Money, this could be the most promising segment for sustainable profitability in the long term. They reported excellent numbers in Q4 2021 results, but short-term wise, they are also contributing significantly to increased losses. For example, this segment posted a loss of 617 million in 2021 as compared to the loss of 511 million in 2020. So this red ink, along with Shopee's massive cash burning strategy, will completely overwhelm Garena's declining profits. Okay, other bad news include interest rates rising at least throughout this year and probably into 2023, which means the market may continue to pull away from high-growth non-profit stocks such as C Limited. Next, the company recently announced it is pulling out of France with its Shopee business. This is apparently due to a poor consumer response. Thus begs the question of what exactly the company would be able to offer if they wish to compete with the likes of Amazon in Europe. Personally, I think it's very hard for them to penetrate the Europe market. Finally, Goldman Sachs recently withdrew the company from their conviction buy list on inflation fears, and also because they saw the decline in gaming spending worldwide. They also foresee C Limited's free cash flow will be under pressure amid an economic slowdown. Okay, here are my end thoughts. For me, I usually try to avoid investing in young and unprofitable businesses as a lot of things can happen along the way. I know people tend to quote successful examples like Amazon, Tesla, etc., which almost went bankrupt at one point in time, and look at where they are today. But hey, how many Amazon and Tesla are there in this world? But to clarify, I am not saying that C Limited is a bad investment or they cannot succeed. I just feel that it is difficult to put my money into a company when it is crystal clear that 2022 will not be a smooth year for them. With Garena becoming less profitable and Shopee losses increasing, this is double whammy. More importantly, there seems to be no clear road to achieve profitability yet. So in short, investors should expect a choppy C this year. So many troubles surrounding C Limited, so is it a sell? For those who are already invested in C, I think you can hold your stocks right now. Keep a lookout for their earnings reports in the next 2 quarters. See if they have plans to overcome the challenges that I have highlighted in this video. The company may eventually become a good buying opportunity again in future. And if you have a slightly higher risk appetite and is bullish on the company, you may approach with caution from next week onwards, where I believe the current market will find its bottom. The stock needs to break above $100 to be bullish. Otherwise, the next strong support level is at around $53 to $55, and that could be a super good buying opportunity. I have always shared that you don't need to be very early in successful growth companies. You can hop on a little later than the early investors, and your returns can still be massive. Alright, that's all for this video. What are your thoughts on C Limited? Let me know in the comments section below. Lastly, thanks for watching my video. Hope you can like, share and subscribe to my channel to show a little support. Thank you.